Hey, good people, how are you? Yep, it's a check-in on precious metals. So, a couple of things to make clear on precious metals in terms of positioning and what we've said. It is a macro bull market. Everybody should be accumulating on dips precious metals, gold, silver, and all and sundry. I am on the 4-hour mark time frame. This is gold spot. However, on the shorter time frame, which is 4 hours, so we're talking about the weekly and daily or macro bull, we are actually in a corrective stage at the moment. So this means strength, correction, strength, correction. So it's a correction when you're in a bull market, and if you're in a bear market, it's a bear market, rally, bear market, rally. Okay. So when I say it's a correction, it means that nothing's changed about the bull market, but it does mean there was weakness. So inside our premium area a while ago, we said this has got a nasty little grind line working through it. We also have, let's bring in a little bit of tools. We love tools. Let's draw. We are children at heart. We also have a couple of elements that point to bearishness for a short to medium possible term, and that is a bit of head and shoulder structure. So if I do this and I start drawing, there's a left shoulder, so let's go LS. Here's a head structure, and then there is a right shoulder there. Right shoulder and head. Now it didn't go straight away, I was watching it. And this is what we've got as a working neckline, the 1490 neckline. In other words, we always work on horizontal necklines only. We're not interested in incredibly skewed necklines, either ascending or descending. Price is the determinant, and it must be a level that both shoulders have recognized and either run to or through. This is what's called the HVF method key level of significance rule. It should actually be taken out. So it should be a level, and there's a couple of points there. And it's the nearest logical round number there, 1490. What happened is you looked like you got a triggering, and then you got pushed back up. But there was really heavy resistance at the 1512, there and there. Look, I could make it 1510, and you'll just have a few more wicks popping through the grey line that I've drawn there at the 1512. But the most dangerous one is that weak attempt to keep the bull narrative going. This is exhaustive buying coming under here. So it grinds along its lows, grinds along its lows. And it looked like it was going to get away with it for a while. Let's change color. There you go. Let's go with the blues. In fact, make it a light one there. Whoops, runs into that level. No, you don't, sir. And then this is actually where you got a key element where I said, that's it, boys. That is a very, very critical area. That is a proper smackdown. Again, from that logical point, and you're now broken the grind line. What happens typically? Exactly what happened there. You have a grind line. You break it, you get a return move, and then you set to continuation to the downside. Now, also by virtue of using alerts, we had alerts trigger on the gold-silver ratio. So you must use your alerts on trading view. This is showing that as bad as gold is going down, silver as the higher beta is going down too, because the alerts were triggering higher. We went back above 85. That means 85 ounces of silver to buy that 1 ounce of gold. So this is potentially bearish. Well, it is bearish. It's not potentially bearish. It's currently bearish, and there is threat for that bearishness to continue. Now, we've got a couple of premium want to collect call options and longs on a number of metals miners, and we have been waiting for this. So it's not all bad news. Remember, we're accumulators. These are almost like hodls, so we've been buying from far lower down. By the way, major targets were made. The 1550 up top here, the 1550, I've lost my pen. Let's go back to the drawing mode. 1550 over here was a key targets for us at a number of levels. You've got to remember this broke, and we confirmed it at 1350. That's $200. You know, it's not Bitcoin, but that's a substantial move from way further down. And when it gets really crazy out there, you may well get crypto-like moves on certain days out of the precious metals. And I certainly think it's something you want to have in conjunction with any cryptos. On the topic of cryptos, precious metals have started to dovetail and be an early warning sometimes for Bitcoin as well. Be careful out there. I've warned the longs. It ain't necessarily ready yet. You could face a sell-off soon. And it often lags the gold silver market because people don't take 2 and 2. Why? We are the 360-degree guys. We aren't exclusively crypto. We are traders of method, and we look at all aspects of all markets. This is a global financial system. And what's happening is they didn't like the canary doing a little bit too much singing in that gold mine. So it's got to rest. It's not going to be allowed to go one way up. Absolute moonshoot. By the time that happens, then they've lost all sense of control. So they're going to continue to assert some degree of control, and they're going to try get the dollar to get back on the front foot. All of the precious metals. If this is the first video you've seen, go look at the macros on precious metals against various others. I might flick through gold on the euro and pound just for a quick courtesy for you and repeat some of those targets, but you should watch and you should subscribe and you should hit the bell. Also, if you like the methodology that we utilize and you want to learn more about how you can be a trader of this, remember I warned palladium was our best pick. We took palladium, it made its 1825 target and we were out. Now, and we predicted in premium that after the palladium target being out, this worrying bearishness with the grind line that I've illustrated over here, that's this one that I'm moving around now, would probably be allowed to take its course of action post that, because as a whole it makes sense that once palladium was done with its target that it might relapse a little bit as well with the rest of the precious metals complex, although I still expect it to show relative height. You can see the target I've just drawn for you there, that's roughly 1424 from the tops of 1550 that we had run over here. It's not the end of the world if this makes target and comes back down along here. You'll survive, but it just means it ain't up now. And it has an effect on people that are also in the crypto markets as well, because there is beginnings of a correlation. If they start reasserting fiat strength, it's not good for Bitcoin either. Not just silver and gold. So that's gold, and we covered it. So why don't I show you silver as well? Let's wipe the screen there, and we'll take you through the XAGUSD as well. Take a look with me. How was it different? I tend to like the ICE exchange, probably one of the best. So we've drawn this as well. Very much bear flag channel based structure. So that kind of, if we once again go to our draw tool, this was your blow off move, you know, and there was a little setup there. We took that as well. We added to positions. Then you get your sell off, you get your late bulls rally. Fails to make a new high, you get a second stage sell-off. So in terms of your flags, you know, you have a bit of a flagpole there, you have a bit of a flagpole there. This one establishes the top end of your range of your channel. The second one segment lower. And note how the price behavior just kisses each of the tops and bottoms consistently. Here, here, and there. And then along the lows, and also quite interestingly, why we always take midpoints both on our wedges and our flags quite consistently along here. You can see the low there. When you break that, a short wait, an attempt to rally, spilling like beans. We had upside HVFs in there that we were in that have performed. Now that might be a little bit of support for a while, but once again could ease a little bit further. You've broken this channel. This is exhausting. Again, the exhaustion buyers here as we come in. Exhaustion buying can only just bring the bottoms along at this weak grind. In other words, there's quite a lot of pressure that's just doing a tactical retreat and eventually waits for you to be absolutely dead on your feet. It's the Muhammad Ali George Foreman one punch, and Big George, who is absolutely exhausted, topples over. Okay, what a puncher he was. I wouldn't like to be the guy that had to exhaust him out. Anyway, let's digress too far, Francis. Keep it in the here and now. Let's go over to the gold-silver ratio and remind you of how it rolls, and I'll also do, as I promised, the euro and the GBP. To remind you that this is a macro bull. Right now you're just seeing bear, we're looking through the 4 hour. Remember, we don't just peep through the keyhole. The whole game of being a successful trader is recognizing there's cycles within cycles that are, and there's time frames. Are you bullish, are you bearish, only has reference to a time frame. So I am both bullish and bearish. I'm bullish on the super macro, and right now in this moment, in the here and now, and before, when we warned in our premium community that you would have heard, if you were inside, grind lines, we're going to have a break. Precious metals are going to come off. Guess what? We're not chasing the calls on our favorites. We're thinking we're picking them up cheaper later, and we'll have more time. We'll get them in later. The cost of carry, the time decay, your entries bloody well matter, especially if you're doing options. But if you're doing spread bets and anything else, entries matter. You want to get as low to the bottom and as close to that, so that you can have tight stops, and that most of the time the market is moving for the first time impulsively away from your entry. That leads to comfortable sitting tight trading. Get in too early and you get beaten up. And I think a lot of people on Bitcoin, this is a precious metals clip and it's traditional markets, but a lot of people are going to get beaten up getting in too early in Bitcoin because they're new to the trading realm, or they've been a year or two and they still think they haven't recognized that they're still new in terms of trading experience. So let's do that XAG, XAU. It's XAU, XAG actually, Francis. 1 is the base number. We'll go with Oanda this time. Here you go. So this is what you're seeing. So this was, again, let's draw this. Well, actually, before I start drawing, let's just get you up to the top line view so you can remember. This is all a big ass rising wedge. And you're at near time or all-time highs virtually after the peak out. So maybe monthly is pushing it a bit far. Let's go back to the weekly. You've made 94. And you got a proper smack. This was the beginning of the precious metals bull that we call. The minute you fell through the bottom of that wedge, yes, it only just fell. Well, not really. It did a proper wick through, but that was a break. And this is all part of the return move on a macro level. This is a proper big chart. Big charts give you big moves, big ideas, big biases. You should be long-term bullish. So what's actually happening is, this grind line over here is actually a bullish event because it shows the weakening of the gold silver. There's exhaustion taking place here with everyone overemphasizing the gold at the expense of the silver. You drop out of the top floor here, you fall into the basement of the wedge there, in you come, you try reach to grab the brass ring at the top of Mount Everest. You've run the previous high. Guess what? Yes, you guessed it, 08, 09, just before the crisis, and then the golden metal highs 3 years later. Boom, check at that, all the way down from 90 to sub 32. Well, wouldn't you like to see that again? That gets cut by 2/3, and you're only holding a third. You see the same in current prices. Imagine what gold, and then imagine what silver within that will be. Anyway, all that aside, this is your macro. So now I'm going to take you into that little circle right there so that you can see how it's gone down and why this will still just be a little bit of a pushback, an attempt to regain the comfort of the rising wedge's womb. We want to climb back inside. We miss mummy. Okay, that's not allowed. It's not allowed. It's slightly perverse. You can't do that. The game's up. You're out. The umbilical cord is out. You've been cut. You're going to fall. You got to hit the ground. You got to run. I was born my mama's son. When I hit the ground, I was on the run. That was ZZ Top. That's what you got to remember. And you got to run with it, baby. Anyway, enough of these absurd analogies. Let's have a little look. So there was the snapback rally. You squeezed, you couldn't hold, you went back down. You push back up. Then you're channeling. That is not good. It means it's going to go up generally. So this is very much like bull flag structure. The only difference is this is an extremely long flagging period, but it is not bearish, because what it means is the sellers are coming across the top, but they are exhausting. They're unable to push it down too much, and actually the buy side here is tactically retreating. You went really low volatility. That gives you a squeeze. You pop up. Before you know it, you're at the other side of the range of the channel, and guess what? After touching the grind line, you shooting star, come back, rest, and pumpity dump. Up you go. This now means both are falling, but just the silver's falling quicker. So overall, this is going to be a skirmish that the fiats will win on the short and medium term. We're going to make some territory back up into the mid and higher 80s. We through 85 now. We're going to get into the upper half of the 80s to some degree. It's a question of how much further after that. Do not forget, the child has been part delivered. He can't get back in there. Okay, mum don't want him no more. It was kind of painful enough for 9 months. So this thing is on the delivery side, and that means precious metals up, and this ratio longer term going down. Okay. So the super macro of gold and silver is both bullish for Bitcoin, in my opinion, because I'm bullish the super macro Bitcoin. But right now, you're going to have to watch it as well for those of you in the crypto realm. And anyway, we've got some special equities that we're really keen that are in super macro HVF setups that we want to trade. And I'm talking 3x, 4x that options are available. You can spread bet, etc. Are well-known ones and are particularly pick of the bunch that have exposure to silver. So we're going to be looking for this and saying, come and get them, make them cheap for us so we can get in now. Take the strikes nice and high so we can buy them out of the money when you're having your last little push up of the gold and silver ratio. And then when the precious metals reassert, those out of the money options go boom into the money or at the money, and straight away their value starts moving immensely. And with the power of the move, the expansion of the volatility, you also get option value coming in. So it's a great time, and these are opportunities, not bad news. So the super macro is along precious metals. Right now, short and medium term, on the 4 hourly and less, we're going to have a rally on the ratio and a dump on the metals. Let's just take you past palladium, one quick journey, XPD, USD. It does actually matter which one you went to as to the values, by the way. So on this one, you might have just missed target on palladium. That was a beautiful structured pattern that traded all the way. Note how palladium is also not wetting the bed quite as much as the others. Let's just clean the face there. Get rid of all my blue scribbles of great excitement. All this talk of birthing. Goodness gracious me. The mamas. Yeah, so that was a great move. It's a great structured pattern. It's got a shooting star here, may ease a bit, but this one could even have a little push up before. It's not crapping itself quite like the other two. Real relative strength from palladium recently in terms of this. Anyway, so you got us the idea. I shared that draw and the targets. Well, of course, our premium guys were in that first. Book a call, damn it. Make some money. It's reset season. Be early. Be in the trade early. It makes a goddamn difference. Entries matter. You can pick up things free and you think you're doing yourself a deal. Let me tell you haven't learned the 15% of it. And when you really, really want something, you make that investment. And you talk to a real trader who's trading HVF. Not a salesperson. We're not a sales organization. We're a training and trading organization. And we love making people better traders. But it's a tough old journey. And if you have any doubt, leave it out. Because you're going to go on a journey that will challenge you at times. You can have pain. You can have pleasure. It's like life. You just don't get an easy life necessarily, although at times you do. Okay, that's precious metals. I will throw it in. What the hell? For those of you that are in cryptos as well, those of you that are ardent precious metals only guy and are scorned by the concept of cryptos, you can stay out. Wow, a couple of lines in there for you, aren't you? Wouldn't you? Let's take them away. So watch out for this structure. Watch out for this structure. I think it's a bit soft. It's low vol. I don't know what's going to come next, but I would argue that if I just flash that line, you can see these big gray lines, these two fat ones. There's a bit of a pullback channel and we're close to the other side here. And this is going low vol, and this is a frustrating kind of market because it's no longer dominated by a predominant trend. It is largely easing down from the 13.9. You got as low as the 7.4s, I think it was here. But you having had that spill, we stalled at our second interim. We haven't made the target. There's still time, but you're suddenly getting a major push up. It just avoided stopping out. So what's actually happening is you're getting a little bit of schizophrenia. And every time there's a pump, everyone thinks it's a bull, and the next thing it dumps. Every time it dumps, everyone thinks it's a bear, and the next thing you get a pump. So it's alternating. Most trend traders and most breakout traders, which is most people, will lose money on Bitcoin, and it's designed to do that because the big super macro pump is coming and they want to empty your pockets so that you don't make any of the money on that upside. So the game here is actually not doing damage to your Bitcoin pockets and position so that you can benefit from the super macro move. This is an easing. I think I've said this before on previous clips. We're in a large structured continuation pattern, for my opinion. And remember, I can always be wrong, but everyone expects all-time high, bear market basing out, new all-time high, and every now and then, in the exceptional cycle sense that we are in here, I think that won't be the case. So let me put it on logarithmic. I'll take all those lines out because that must be making some of you seasick that don't know what they're about. Whoops, I didn't mean to do that. Go away. Lines off. So this overall, if we go back to jaw mode for me, and I think the precious metals has a similar element to this, is a pullback stage in what is a super macro bull. So I don't like going short for long in a super macro bull. We wanted that one to make targets. It hasn't. We took a lot off at second interim. I went riding motorcycles. I was grateful for that. We only put a little bit back on, so the spike didn't hurt near as much as we made profits on the good break there on the grind line. But what could happen? It could revisit down. It might make a new low. It might make a double bottom. It might only go half the way down. Who knows? Too many options. The key thing about Bitcoin right now is I ask myself, is there a clear-cut high probability trade? Answer in one word, no. No. What do? Do no damage. Every trading decision starts with do no damage. Keep your ammo dry, because the moment when it comes, if we do get a base out there or a base out sooner, and then we get a trend rally up for here, and then we get a very soft sleepy phase, bore you to death. Boredom is going to come to crypto. You don't like that message, and it's going to see you trying to make money taking direction in a directionless market, and that's going to kill you, because you'll chase every little micro move up as an entry because you're waiting for certainty, and you say, there, it's moving now, I'll get in now, I know it's going up, and immediately it'll turn and come back down, and then you'll go, damn, maybe I shouldn't have done that, and it'll start drifting off, and you'll sell, and then straight after it's drifted off for a while, it'll start rallying. So the range is going to get constricted. The range is going to get constricted. Boredom will come. Some people will start to say things like, it's like watching paint dry. That will be the key moment for when you want to buy, and it'll be a key moment also for gold and silver, and it'll be a key failure moment of crypto, and the whole world will suddenly look like it's exploding in that moment, because suddenly your USD Korean won trade starts going through the roof. At the same time, your Bitcoin trade starts piling up as every Korean jumps into crypto, and half of China has got family in Korea, and and so it will roll. So you could have 4 or 5 trades all doing exceptionally well at once. You'll think you're a genius trader. Meanwhile, you've kept enough ammo for the key moments and not got killed during the great boredom. Okay, so that's a Bitcoin, that's a gold, that's a silver, and the final thing I did promise you that I didn't give you yet, and I will finish now on, was the gold versus the euro. Just to remind you that it is a bull, even though you're looking at what I'm showing you and say, that don't look good. Well, actually it's good. It is good, and it's a pullback, and that's simple as that. And if we have a look at that those were your upside jaws, and these are your targets. Excuse me, drawing extra lines here. I've got to get my act in order. 1686 for your euro. This is all a pullback period. Look how strongly you went up. Look how strongly you went up from that triggering event there. Gold, euro, an assert. While it's going down against the euro, I reassert 1686 as a reasonable target to be had in good time. Not tomorrow, but in good time. You won't be waiting a lifetime for that one. And let me just reassert it again on XAU, GBP. You can go look at the exact same charts on Aussie. It's at all-time highs against the Aussie. I will do it on GBP on one of the other exchanges where I've already annotated for you. We'll go Ananda, I think that's the one. There you go. So reassert gold to 1511 on the pound, as it's trading down right now at 1140. 1140. So while something is falling you, I'm reasserting a bull target. It's absolutely supposed to do that. It's in our second interim. It's ripped it. Look at that 3 rising method as an 8 in those RH3 and RL3. Absolutely beautiful. It's absolutely ripped it up to these highs. at 1285s odd, and it's going to have a pullback, and that's absolutely expected. That's the beauty of HVF method. You can learn so much more about it and how we draw with it, and you can actually show you XAU, AUD, and you can see how it's killing it against all fiats. It made new all-time highs against the Aussie. The Aussie, they're absolutely killing the Australian dollar to avoid their housing market from crashing. So that devalued Australian dollars, they're still holding some value. So the interest rate policies, keeping their banks solvent. What does that mean? The canary in the mine, in the Australian mine, whistles even louder than the one in the American mine, in the British mine, and in Euroland's mine. But a pullback, we don't go up straight in one market. That's it, I'm done, guys. Hope it's interesting. Go watch the free mini series. Go grab a call if it's for you and you want to give it a go. But remember, it's a journey with upsides and downsides, but you will learn and you will come out smarter and stronger with a skill that will stay with you a lifetime. There's self-study options as well, so most price points can be catered for. Look forward to catching up with you. Thanks for watching. This is your gold and your silver and your gold ratio and your Bitcoin clip. It is now done. See you on the other side. Don't talk about birthing things to your mama and anything that I say. I do lose my mind at times. Thank you very much. Bye for now.